Okay, Kevin and I have over 40 years of experience trading real money. We started in hedge funds. We both have a professional background, and we most of our rest of our career have been just day traders like you, aka using our own money. And tonight we want to share with you another way to help you thinking about your trading in a different way, especially if you are struggling as a trader or you are wasting a lot of time in front of your computer and you are not making consistent money. Tonight, Kevin and I will try to share with you guys stuff that we do with real money. So this is a screenshot of my account. Can we see, Kevin? Is that flowing through properly?
Yeah, that's right.
Okay, awesome. So this is a screenshot of the account 2 days ago. This is one of the accounts where I had a running profit of over $4,000. And the reason I'm showing you this, guys, is to show you that the type of strategy that we do is to manage a lot of our portfolio. This is the delta in our portfolio, and we'll explain that. And that is a theta number that we tweak throughout our trades. And what we do is we do a lot of income trades that we break apart. So I don't know if people are familiar in the room, but we do a lot of credit spreads. We do a lot of debit spreads. We do a lot of iron condors, and we do a lot of iron condor butterflies. But what we do as the particularity of what we do is we time those legs around support and resistance and break those legs for max profit and also for max defense. So tonight we'll show that a lot of people, unfortunately, in the guru circuit are selling you iron condors, credit spreads, but they are not really showing you how to defend them. You know, they are not really showing you how you go from a bad trade. You know, we will all have bad trades, you know, and how to defend those bad trades into good trades. You know, in this business, it's easy to have good days. The key is, do you have good weeks and good months, and do you have consistency in your processes? So this is an example of an iron condor. An iron condor was a fairly delta neutral strategies. We were short around the 2000 long, sorry, towards the 2000 SPX, right? And we were short towards the 2125 SPX. And so what happened last week when the market kept on going up and up and up, okay, so the market goes up, 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 up in between your short strike of 2000 towards the 2100. Here, that was the current price, 2100 plus, right? So what we did is bought back our short strike on the call and essentially created a net long position. By creating this net long position, we were able to add another $800 into the profit into an iron condor. So instead on the iron condor, instead of making only $2 or $1.65 to make 320, we are able to triple the potential of the iron condors or the credit spread by doing a couple of tweaks that we will show you tonight. But everything starts at a different process. This is another screenshot of April the 13th. April the 13th, we had a similar position here that we had on Amazon. See? But here's what we did is we let the 555, 550 put credit spread continue going up as the market was going up. And then we bought back the 580 short strikes and let the 585 short strikes. And this was a good, cool double and with an open P&L of 2,963. So what happened is if you have a support and you have a resistance, you got to be able to time your entry on your put credit spread here and your entry on your call credit spread here. But sometimes what happens, you are smack in the middle of the range where you have an equal distance or fairly equal between your support and resistance. And this is the time where an iron condor on both sides, a bet where you are short here and you are long here, so long it doesn't go below this and above this, you make money if the market goes up. You make money if the market goes sideways, and you make money if the market goes down. And it took me many, many years because initially when I started in hedge funds and prop firms, I had to trade the current price. I had to trade NASDAQ stocks, I traded futures, and I was obliged to take bets that had only a 50% chance of success. And Kevin and I have refined over the years the processes to be between 68% chance of success to a 95% chance of success, which is a 1 or 2 standard deviation in the options world of distributions of statistics. But really what we do is using simple support and resistance and creating buy zone, caution zone, and sell zone to create our decision-making process. And this is how we are able to make trades like you see right now on the screen. Another interesting thing is that even though we've done this for 40 years, yeah, Kevin and I combined have done this for 23 years. Kevin has done this for almost 15 years. What is interesting is last year we had Penny Krill, our students that I'll show you on our Facebook Mastery program. She had never done income trading back ratio trade. She did some credit spread there and there, but she never had the idea of getting on both sides and started breaking legs. She started in our mastery in January, and for about 4 months she did not trade. She just mastered her trading platform, her broker platform, and then this lady has done has deposited about $32,000, which you see here, right? And she grew that account at one point to almost 4 times. And then she started increasing her risk and doubling her risk and trading more underlying. And she came back at the end of the year, finishing the entire year at 156% return on her money. Well, 156% return on your money when you have less than 1 year in this business is amazing. Even if you had 25 years in this business is amazing. Most of the hedge funds cannot even beat the S&P 500 returns. 90% of the hedge funds cannot beat the hedge funds return. So this lady, just a person just like you, just like me, by at least just like you because she was pretty new in the business, with $32,000 with those consistent and replicable processes was able with her interactive broker account to achieve those results. Okay, and Penny is a real person. I'll show you later on our Facebook group. So what should you do when you are a trader? We boil it down in 2-3 trading steps when you are a beginner. So just curious tonight so that we can have some interaction with Kevin. What type of instruments does everybody trade in this room? What type of a trader are you? How many years have you been trading? You know? So
Julie's asking a good question here right at the beginning. How are our strategies different from everybody else's? Well, our support and resistance, right, is really the key, the backbone to it, our support and resistance. And when we start to look at these charts, then you'll see that we've identified where this institutional order flow is, right, on each of the underlines. But let's get back to what Mark is asking here. What type of instruments do you folks like to trade? Let's have some interaction here, people.
Because regardless of the instruments that you trade, whether you are trading futures, right, stocks for investments or your retirement portfolio, or ETF stocks, ETF options, right, Forex, whatever that you trade, everybody, especially on the income trading side, you need to always identify the main trend and the intermediary trend. So what do I mean by that? Well, what we consider in the professional world the main trend is any weekly and monthly signal. And anything that we consider intermediary trend, which we also call a fear factor trend or emotional trend, okay? We call it the 60-minute chart usually, the daily chart, the 4-hour chart are your signal of pretty much those we call it the retail the retail signals, right? And so what we are looking for usually is to look for trend within the main trend and using exploiting the intermediary trend retracements or resistance retest to trade within the main trend. And the reason being is it's like being in the ocean. If you are a surfer, it's way easier to go with the direction of the ocean than to fight the ocean. And eventually, in this business, if you keep on fighting the trend, the prevalent trend, you'll get crucified, you'll get crushed, and you'll be part of the statistics where 90% of the traders lose money and 10% of the traders lose money. So the key question is, what are those 10% of the people doing? Because there is a transfer of wealth from the newbies or the uneducated trader to the 10%. And a lot of it has to do with 3 steps. Number 1, the trend. Number 2, picking entry and exit zones that have high probability of success. So if you look at a support and you look at a resistance, if you know that this is a key support, a key resistance, and you use a chart formation like a double bottom or inverse head and shoulders, or you use a cross, recross, that's a trade setup, retest higher low, going to the next level, which is a shift of momentum, then you don't need to take all the crap trade in between the point A to the point B. And a lot of the newbies, they come every day and they have been taught with life. You know, we are taught in life that the more you work, aka in this business, the more trades you make, the more money you will make. And in this business, nothing can be further from the truth. In this business, is the less you trade, the more you make, and the more you wait for those support and resistance that are crucial to come to you. And then there's a last overlay, which is the right option strategy. Okay, so all those processes are key. Identify the reference point, support and resistance. We just talk about it with the right shift of momentum and chart formation. Number 3, strategies, right? Learn the timing of when to break your spreads and back ratio your trade for max defense and max return on investment, as I showed you in my accounts, right? Now, gambling or not gambling is really your choice. You know, I started, like I told you, in my early days, I started trading 23 years ago in 1993, right? And I was taking trades that were 50-50 chance of percent of success by taking the current price. But what we've learned over the years is we've learned to wise up and understand what professionals do and how professionals are making consistent money, like the account shots that I showed you, and I'll show you also some of the trades that I have currently running. Like here, for instance, if we go to my my TOS account, and by the way, for all disclosure purposes, I have 6 accounts. And yeah, that's an interesting chart of Google aftermarket that we'll go over. But right now I want to show you, for instance, this is my account live. I have some retirement position as well. For instance, like on the retirement side, I bought 200 shares of FCX Freeport at $4. And now it's 11.52, and yesterday was 12. So I tripled this trade. Now, when I reach an important resistance, look what I do with the retirement account. I sell the cover call. I sell the 12 call and the 13 call, which have already gone down over 10% today, right, for protection. And then if they expire worthless, then I reduce my cost basis of $4.17 on the stock acquisition by $1.34 or 93 cents. So a lot of the stuff that Kevin and I are doing, right? A lot of stuff that Kevin and I are doing is doing income trades with our directional trades and cost reduction. So cost reduction tonight is a big theme that you are going to earn and learn from us. We like to cost reduce a lot of our stuff and then always look at defense and max profit. So here's another trade, for instance on on the SLV, which has been pretty cool. This started as an iron condor. So I had the put side 14.13, so this, no problem, worked well, already crushed to almost zero here. But here's what I did. I was short the 15 and long the 15.5, where I bought back my 15 and let the 15.5 run, and look what happened now. This is over a 2.5 times my money. It's a 250% return on my money. So even those are small amounts of money, $1,200 here, $1,500 here, you have to realize that what I'm showing you is that with small trades, 200 shares, does everybody has $800 in this game? Yes or no? Because if you don't have $800 to trade, unfortunately, your tool as a trader is going to be your capital. So the more capitalized you are, obviously, the more money you'll make. But also, if you don't have a big account, $30,000 to me is not a big account, right? You can still take small calculated trades where you can double and triple like this, small amounts. And those small amounts, those singles and doubles are what will eventually create a home run in terms of equity curve over a period of 5 years to 10 years into your account. It's going to be the slow and steady race to beat inflation and to beat the S&P. That is going to be your goal. Your number one goal is to have your money compounded tax-free or tax-deferred and keeping pace with inflation and beating the S&P. And when you start having that goal, now you start thinking like a professional. Now, if you are a newbie, typically your goal is, hey, I'm going to come tomorrow, Friday, and I'm going to double my money on my options. Well, that thinking of looking for 100% return on your money in one day, 50% return on your money in 1 week is the type of thinking, and Kevin can concur that my co-ed trader tonight, who also used to own a hedge fund and has been a third generation trader, this is the type of thinking that will crush and make you lose everything that you have worked for into your account.
Yeah, when you're swinging for the fences, then it clouds your judgment. And what we want to do is we want to get rich, but we want to get rich over time, right? And we want to learn what it is that the market can and will do. And once you understand that, and you're with us for a little bit, then you really get a feel for, hey, what kind of a range do we have on here, and what's our probabilities of making a certain amount on that range?
Exactly. So now one of the key components of everything is going to be having consistent and replicable processes. And the second thing that is going to be important is to understand the crucial role of support and resistance and timing into your income trade. The third thing that is going to be important, everyone, is to understand how to exploit support and resistance in relationship to your implied volatility. If you don't know which trade to do at support and which trading strategy to do at resistance, you are lost. And you need to be automated. Like we say, when there's low IV, you can do debit spread. When you have high IV, you can do credit spread. When you have high IV, you need to understand what to do at the money, in the money. You need to understand all those subtleties, especially when you start in the business doing income trading. So let me explain to you what reference points and zones do for us. It gives us a map. This is Thinkorswim. This is live of Google. And what we do typically is at extreme buy zone, the green lines, we are looking to sell. And at extreme red zones, we are looking to buy. And in between those orange zones, as you can tell, the market was very sideways. This is a caution. This is an area where you have to be very careful being directional. And this is ideally an area where you open a call here and a put here, and you open an iron condor. So what the day trading zones, buy zone, caution zone, sell zones, DTZ analysis with the power line here gives you is the three components we told you about. It gives you the trend, it gives you the reference point, and there's the last missing ingredient, which is what option strategy and when, right? Which happen with training and coming and being engaged in our community, right? Into our real trading videos, real money videos, etc., etc. So this analogy of this extreme buy zone sell zone is like an elastic. If you pull the elastic too high on the top and you release, it comes back to the medium. Or some people look at option Black-Scholes model, which is more like a bell curve shape, right? I'm going to show you on the PowerPoint, and Kevin will jump on
Yeah, I
that,
think
on
you've got a
how
better
to make.
picture of it.
Yeah, but the point and the matter here is you can see very, very nicely for the past 2 days the shift of momentum. Double top, cross, recross of the extreme buy zone DTZ, retest of the caution zone top, which keeps on resisting, earning comes, boom, on the sell zone. So that progression here is very important because we have some of the best support and resistance in the industry that we started, like I told you, 23 years ago in the retail side, 14 years ago, where we work with hedge fund managers, portfolio people, and also financial advisors that helps them manage their portfolio on those hottest instruments. So our day trading zones are some of the 11 most important instruments like Google, Netflix, SPY, SPX, crude. As a matter of fact, you can see them here. I call that the trade navigator board. So then I can see on one shot, 11 market quickly, and we are looking for space from extreme buy zone to sell zone or from sell zone to buy zone with the MACDs here, okay? So like for instance, you have the ES. So let me tell you the 11 market. You have the ES, you have the SPY, you have Apple, you have Amazon, you have Netflix, you have crude, you have Google, you have SPX, you have YM, you have NQ. So for instance, if I go back to our one chart setup, we can flip the chart and look at those trade setup that we were looking and talking about so that you can follow along with me and Kevin. So this was the ES, for instance. So this is not Google, this is the ES. Does everybody see that progression? Cross recross of the buy zone, hold the power line, comes back with a lower high, and it's game over. Lower high today, close below the power line and goes all the way to the bottom of the caution zone. So those give us reference points that are extremely accurate, and that also you can see that we had also the cross on the MACD right there to stay in the trend. So if I have a MACD cross down, negative, and I am below the power line here, it prevents us to go counter trend, which would be to take a long. When we see that type of setup, Kevin and I would certainly not take a long. So let's look at other ones that are live here. SPY for people who trade ETF in their retirement portfolio. Look at this beauty, right? Cross, recross, retest lower high, and boom. Okay, same idea, cross MACD, right? And what you can see also is we look for divergence like this where SPY make new highs, higher highs on SPY price, but look at the MACD, lower high. So to us, it's a perfect divergence that you got to be aware coming into the top of the day trading zones, extreme buy zone. It's extremely important and it's extremely helpful into your income trading and your directional trade. Let's look at other ones. Netflix and FLX. See, Netflix, perfect after earnings from last week too. Double bottom, close below the power line, room, all the way to the sell zone. Okay, so this helps us, right, Kevin, staying in the right part of the market.
Yeah, yeah. Especially that power line. If we're trading below that power line and we've got the momentum that's below zero there, then it helps you to navigate. If you have call credit spreads on and you're looking at this Netflix market, then hey, you're in great shape. But if you're trying to put on long calls here, you're going to get clobbered, right? So post earnings, volatility crush, directional risk, trying to counter trade trend a big move like this, right? A big move down, you're gonna be in trouble. So some of our basic tenets of trading will help you to navigate this market.
So let's look at other charts on the 10 instruments. Amazon. See Amazon the same, it's holding lower high on the top of the buy zone at 640. So you know that 640 is going to be a big resistance on Amazon coming to earnings to that 655. We are going into the NQ. Look at the NQ, perfect test of the buy zone, cross, recross, retest, one more time, the bottom of the buy zone, and it's came over, and now it's in the caution zone. So if you can know where the price is to where the price will be, then you have an edge into the market. So let me explain to you how those markets have come to fruition for us. This is our full pro tool. So if I give you, let's put the crude for instance, and let's put a weekly chart of the crude, and let me explain to you those full pro tool and how they've helped us over time. Okay, let's pull the continuous contract CL-F equal 1. This is e-signal, by the way. And so what we've done over the years and the way it was structured to help income traders and to help also people who are doing directionals and people who are doing also portfolio retirement is the concept was to take. I used to look at the monthly chart, the weekly chart, the daily chart, the 60-minute chart, the 4-hour chart, the 5-minute chart. Remind you what I told you earlier, the daily 60, 4-hour 5, those are intermediary trend. Remind you that the monthly, weeklies are the main trend. What I've done with the tools is put everything into a 160-minute chart where I have 27 zones from all time frame, from all the instruments and the indicators that I used with real money for the past 23 years, and see that down arrow is an intermediary signal. Then it goes below the power line. Those ping that, gives you a 70% plus of a continuation from the move to the most important zones, which are the dash, to the dash, to the dash. And that gives us reference point on the crude since about 98 all the way to that 29 area. So this was good for about $70,000 a contract over a period of 2 years. Okay, we took this, which is available for all instruments, all futures, all ETF and stocks. And we took the full Pro Tool, which is only available for our hedge funds, our professional institutions, and the retail traders that take our mastery program that we take, where we take 45 people under our wing twice a year. And we simplify that to give a unique, easy visual product for the retail public. And this is what has transpired from that. Okay, so now let's look also to the last ingredient, and Kevin is going to explain the analogy between this and the option. We're going to look at the option chain like on SPY, and we're going to show you why the delta do not always work, guys. And so here is the process. Kevin, it's all yours. This on the left is the normal distribution of statistics, right? So one standard deviation from here to here gives you a 68% chance of success if you use deltas, and from here to here it gives you 95% chance of success. But I'm going to show you tonight with the Google example why those deltas, especially for earnings, are BS, okay? And why price action cross time frame. Price action, order flow from institution is more accurate and more predictive than this. And I'll explain it to you after Kevin shows you a little bit the analogy between the left side and the right side again of the elastic band. Go ahead, Kevin.
So, if you want to look, let's look to the left there, that bell-shaped curve. We're all familiar with that from school, right? There was always some kid who was a genius that was ruining the curve for everybody else, right? And so on the bell-shaped curve, we look at this distribution, and we say that when we get out to the edge of the distribution, just like an elastic band, we tend to snap back in terms of price, right? The price snaps back from this second standard deviation back to zero, okay? We call this that price is mean reverting, okay? And so if you look now to the right and you look at these levels here, there's green levels, there's gold levels, and then there's red levels. Well, the middle of that gold level, right, that 2122, that is the mean of the distribution of these price levels where institutions came in and took action, right? And so if we look at this distribution now to the left, right, we can see that as we hit the edge of the distribution here, that all of these occurrences that happen, they're very few occurrences that happen out at the edge of the distribution, and most of the occurrences happen right smack in the middle, right? That's why we call it, now let's look back to the right again, that's why we call it the caution zone from 2126 down to that 2115 level. We say, take caution here, there's no directional edge. It's a 50-50 coin toss trading out of the middle of this distribution. Okay, and what we want to do is we want to wait until we get prices down at the edge, the 2105, the 2101, the 2096, out at the edge of that distribution. Then we can buy it up down there, and we could trade a snapback trade back up to the 2122 level, right? Or up at the top here, if we had prices up at the 2130, 2134, or the 2145. That's the edge of the distribution. We want to sell it up there, and we want to trade back to the middle of the distribution, the 2122.
So let me explain quickly why the deltas are BS. Because you got to understand this. Look, if we pull a Google chart, right? So let's pull the buy zone, caution zone, DTZ analysis of Google today, okay, which is given to you, by the way, before 8:30 in the morning. Okay, so an hour before the market opens. So if you look at this, question to everybody. If I was looking to buy a weekly call at 750 today, what do you think the delta was? Any idea? When we were here at 780, 770, what do you think the 750 delta was? The 750 delta of the call expiring tomorrow is. Well, can we agree to disagree that this was probably a 80, 90 delta? Yes or no? So if you had rely on the delta, right, it would tell you that you had 80 or 90% chance of success, right, that you will expire above 750. But look what happened after the market. Google crashed all the way to 717. So that call option tomorrow, that's what we call contraction and expansion of the delta. That call option tomorrow is going to be worth nothing. And this is going to be probably be a 10 delta or a 20 delta. And the person who bought that 750 call today is going to lose a lot of money. Does that make sense? But if you had the tool, you could see already the cross, recross, retest below the power line and playing in the caution zone. And it was not a bullish action. And this is key. This is key, guys. Those are the type of things or advantage that the delta does not give you. Look, if I go to Google, why don't we look at it? Maybe we still have the 750 there. So if I look at the 750 that expire tomorrow, and you look at the 750 call, well, because they must have changed there. But that 750 call, guys, when this thing was at 780 today, that 750 call must have been extremely high, right? So this is key. Let me see if they have updated. Yeah, no, must have been extremely high. Tomorrow, this call, okay, on the 750 is worth nothing. Okay, so those are the type of things that you have to understand where the delta and making your income trades, meaning taking trades where 750 look like a safe bet to take a put credit spread, and 800 look like a safe bet to take a call credit spread, where you will get crushed if you don't have the right support and resistance. This Google earning is a perfect example, right, Kevin? Why the delta does not work during earnings season when there's big news. Deltas are usually more accurate, and you can write that down with the SPY, right? The IWM, the Qs, everything that is index based, the SPX, the NDX, right? Anything that is index based, those deltas are more accurate because those big moves are not as exaggerated. But when you are talking about tech stocks and tech stocks during earning weeks, those deltas are worthless.
Yeah.
And this is why you got to understand that order flow, price action, prior highs, prior lows, where institutions have made marks are extremely important in your decision-making process. So
if you have a full Pro Tools pick of Google, we could take a look at red dashes. I think down there at that.
which time frame? 60
yeah,
or
Google,
weekly?
Yeah, on the weekly is fine.
Okay.
Let's take a look down there. This would be interesting to see. Okay, so I have blue dashes, right down where price stopped, right? Look at that. See that? I've got support right down there where price stopped, in between that 720 and 710. I've got multiple supports down there.
See, on the full Pro Tool, the main support was here, was here, was here, but this to us was our biggest resistance, and that biggest resistance fell at the close. That was a telltale
to came down to that 720 level and stopped. So I've got 3 levels of support down there at that 720 level. Yeah.
Right. And as a matter of fact, this was part of our action video that we give for free twice a week. We send an action video, and this was part of our action video, this analysis on Google and the strike on our iron condor. And so this again, you need a plan, you need a blueprint, where it is to where it's going. Same here on the ES. If you don't have that blueprint with a high probability of success, what's going to end up doing is between the buy zone to the sell zone, you are going to do all those crappy trades here, right? And these trades are the trades that have the transfer of wealth to the 90% of lose money on those shoppy channels, right? To the 10% who make money. Because the smart players, they do income trade here and here, and they make bet that we will stay below this range and above this range, and they make tweaks. And those tweaks are the tweaks that we showed you that make $7,000, $23,000, that expand, breaking those legs on those debit spreads, credit spreads, iron condor, and iron butterfly. Next, let me show you. So we talked about this, talked about that. Next, I want to go through the option strategies. If you look at this matrix, guys, there's 36 option strategies. And I want everybody to understand, Kevin and I have been at this 39 years, we are one of the few people in this industry who have shown our P&L, not only P&L on those trades like we show you, but we also showed the yearly P&L last year on where we triple in a small account of $8,000 to $24,000. And you have to understand that Kevin and I do not need to know what a Christmas tree butterfly is in order to make money. Kevin and I have 4 to 5 option strategies that we master, and we master them with the back ratio and breaking legs. And these alone are the option strategies that make money. So we are extremely focused on few strategies. As a matter of fact, Penny Creel, our students that had the 156% return on the interactive broker account that I showed you earlier, and at one point I showed you she was at 243% return, was using only 2 strategies, the credit spread with the back ratio. So that's it. That's all she was doing, credit spreads and back ratios and easing at support and resistance and timing with support and resistance where to buy back her short strike on her credit spread. So this is very important because a lot of you guys spend a lot of time on Google and from shitty webinar to shitty webinar with people that don't even trade real money, trying to learn all the strategies on the planet Earth, where only 3 to 6 strategies in this business is all you need to be very good at options, okay? And I think this is very important, the power of focus on few instruments, right? Focus on few instruments. You know, some of the best traders I've always traded in the world only trade SPX and DX. They only trade 1 or 2 instruments. You know, you don't need to have a watch list that is very big. You know, a part of the reason why I have a more extensive watch list here is because I have 6 accounts. I have portfolio margin, I have retirement account, and like the Walmart, right? XOM, PSA, Disney, Schlumberger, right? Why do I like those? Or this one, AT&T, Verizon, because those are dividend stocks. So I buy those at support and resistance like FCX perfectly, and then it's like twofold. Look at this FCX that I have in my retirement plan. I bought these things at $4, right? And it's almost a triple, 1152. As a matter of fact, yesterday was a triple. And then I collect income by selling cover call. But what do? I do 2 things. It's like having a house. I have what I call equity growth by buying at the right support and the right resistance using our tool. So I have equity growth on the right stocks, ETF for my retirement portfolios. And 2, I have the income that I had, right, with the cover calls, the naked puts, and also those income strategies on the credit spread, the iron condor, and the back ratios, you know? And when you start knowing those few strategies, you can repeat and repeat again. This is the power of the franchise concept, the being able to repeat and repeat processes that are successful, okay? Question to everybody here. What do you think, because you have to see yourself as a business, what we do is a business. And if you think this is not a business and that's a hobby, well, you better not trade and put your money into a CD, because the next thing you'll have within the next 12 months is you would have lose everything. And why? Is because people who are well prepared, people who have done this like me and Kevin, will take your money. I mean, there's no doubt. We will take your money. The high frequency trading system will take your money. The dark pool games will take your money. And if you don't understand the mechanics of this market and how the markets are being rigged and how you can play them where the probabilities of success are on your side, you will get destroyed. That's a fact. You know, Kevin and I have been around the block many, many times with many, many accounts, and we know. But one thing I can tell you is what makes this franchise one of the most successful franchises in the world is that they have consistent and replicable processes to the point where I can take, right, a guy who has fairly no education but a very strong will to succeed, right? And you can put him at the corner of a street to manage a multi-million-dollar operation like a McDonald's, and guess what? You'll be surprised. That guy within 6 months will be able to run a McDonald's franchise. And the reason being is not because that guy is a genius, it's because there's 2 things going on. 1, this guy has a strong will to learn, and 2, he is working with the best processed step-by-step company in the world that has been proven itself over and over again, from Paris, France, right, to the US, to Russia, to Timbuktu. If you order a royal with cheese, it's going to taste the same. And the reason being it's going to taste the same is because it's the power of processes and franchises. And you got to approach your business in trading the same. Kevin and I are obsessed to have processes. See, we take yellow pad. Every week, every day, we analyze our trades to make our back ratio better, coming from an equal credit spread, this is more advanced, to breaking legs. And breaking legs needs to happen only if you understand how to time good support and resistance. You will not be able to do that without timing good support and resistance,
Can I
everybody.
jump for a second? I've got
Yeah, and I'll go
both
explain
Chris.
that trade, that back ratio trade.
Okay, cool. Yeah, both Chris and TD were talking about that. We've been discussing this back ratio back and forth in the chat, and that's an example of that back ratio. And all we're doing is it's fairly inexpensive adjustment, right? All we're doing is buying back some of the short calls or puts, whatever you're trading. If you're doing a put credit spread or a call credit spread, we're just buying back some of the shorts. That's all we're doing, right? And
God,
it's for two
you have it
reasons,
here,
right?
Kev. You
Oh,
have it
good.
here.
And it's for two reasons. It's for defense, right? And it's for max ROI, right? And so there's two different reasons to do that. So you want to study that. I mean, Mark is really the best in the industry, right, in terms of trading this every day, right, and teaching it every day, right? And so he's really the best out there. And you know, I'm the co-head trader, but I learned everything I know about back ratio defense from Mark.
The idea, guys, of a back ratio is this. If you are short the market, so your assumption is the market is going down, you open a call credit spread, but suddenly you have a recross retest higher low from your support, right? And your resistance becomes support. And the market doesn't go down. Instead of going down, it goes recross higher low and it flies. So when it flies, you have two choices. And the problem is many traders lose in income trading because what do? They take their $200 loss here again and again and again. So they lose that 2 or 3 times and then they make money 7 times. But even when they make money 7 times with 70% chance of success, they end up losing or break even at best. You are not making money. We do not get out. We know how to tweak and get out. This is why I do options for the past 23 years, because I love the flexibility of what the options allows me around our support and resistance and around our assumptions. If the market is going to fly, all I have to do now is buy back my short. So I take maybe a $200 loss on the short, yeah, but I like a net long run. I net long run, and guess what? Sometimes I make $900, like I showed you earlier, $3,000, like I showed you earlier on Amazon, and that's how it works. Those are real money example I showed you at the beginning of this presentation. So you got to understand timing. That's key. Support and resistance is part of that timing, right? And the proper sizes. How do you time size? How many size? I mean, there's a lot of tidbits. And I'll tell you, if done correctly, the back ratio is one of the best defense technique also to maximize your profit. But if done in a wrong way, it will kill you. Okay? So you got to understand, and it's not that complicated, and it's not as dangerous as people think it is. Here's an example of a back ratio. I was losing $300 last year, and I was losing $300 on a 2005 SPX. I was short one call, long one call. Well, I had DTZ set up as follows. 1950 was a support, 1975 was a resistance, right? And then you have 2000 resistance. And then I had a 2050 resistance. So I was looking at my zones, and I like, okay, we're going here and we are going to puke. So I opened the 2000, 2005. Well, instead of puking, cross retest higher low, and I said, oh, I got to get out of here because it's on its way to 2000 and 2050, and I'm going to get crucified. So I took the $300 loss, right? I had 45 days in front of me. That $2.40 long ended up being a 20 times my money trade. And it ended up being one of the best ratio of 2015, making me $4,000, everybody. A $300 loss turning a $4,000. The problem, again, like I told you, in this business is a lot of the newbies, they take that loss. And you should not take that loss, because that loss, a loss plus a loss, your capital is like a piece of pie. And each time you lose commissions, each time you take a loss, you take a little bit out of the pie. Before you know it, you lost 50% of your account. Well, to come back where you were initially at a 50% loss, you need to have a 100% return on investment, everyone. So you got to understand those principles. If you don't understand those principles about money management, size, defense, and flexibility of strategies, I'm telling you, 6 months to 12 months out of the business of day trading. It's you just were part of the stats. Okay, this is also key. Understand the concept of implied volatility and how we look at volatility in relationship to the option strategies. This is a cool example. $23,000 made at the low. You know, we were on the downside with 1,021 delta short on going to the support low of August of 2015, made $23,000. Guys, that was $23,000 based on a $35,000 account, believe it or not. Okay, and look, I'm going to amaze people that the back ratio, this was a debit spread back ratio where I had the 210 puts and the 205 puts, right? If you calculate everything here, I had 26, I had 30 put long and 31 put long. This one plus this one is 11 plus this one is 31 and 25 put short, right? Well, that was some type of a debit spread with a net long 6 put, right? Well, but look, the power of small size. Believe it or not, small size are powerful. $14,000 into a net back ratio on a debit spread, because guess what? The back ratio processes that we do works also for debit spread. They don't just work for credit spread, guys. This is very telling. So you have an opportunity tonight to be part of our community, whether you go at it all alone. To become successful in trading, me and Kevin have drilled that tonight. You need consistent and replicable processes that you can trust, so that you have confidence in your trading. We'll do question and answer after I show you what we have for you. It's one of the best opportunity to come into our DTZ analysis. We meet on Tuesday for the trade of the week, so you learn money as you earn. It's a trial that we have for you that is very cheap. You get the DTZ analysis for those 11 markets, the ES, the crude, the SPY, Amazon, SPX, Google, Apple, and the YM and the NQ. We have also TLT now. Those plot automatically for eSignal, TradeStation, Ninja Trader. On Thinkorswim, it's easy. It's a paste and copy code every morning. We have the weekly get-together on Tuesday. We have a video weekly blueprint, and we also have a two-part series to understand credit spread if you are a beginner or intermediate. That trial, the done analysis for you, the DTZ auto plotting tool and the weekly video is available for you. Every Monday we have the weekly video, okay, for you. On Tuesday, we have the get-together. We have a bonus on understanding credit spread, which usually we have sold for $497. You can get everything tonight for 14 days for only $7, guys. $7. And also, if you are not interested in this one-time special offer that we do, this is not public into the we have a store on our site. This is not public. Usually it goes for $97 a month. All you have to do to get that trial is to go to realtraderswebinar.com/DTZ free. I repeat, I don't know if Kevin is around to post the link, realtraderswebinar.com/DTZ free. This is very important because this is where you'll get. Now, if you are not interested in that trial, you can get a 3-part training series video at that link. Let me see if I can pull the link for everybody because I don't see Kevin around. But here's what you have, guys. If you go to that link, Real
we got
Traders.
posted in the chat also. We just posted it in the chat as well.
Okay, /DTZ free. Let me show you what you get also if you are not interested about the $7 trial. All you have to do is put your name and email, or just your email, sorry, and you get 3 videos from us with real money about the concept that we talked about. 3 videos, they are free. But most importantly for us is that you would be invited to our live event next week, April the 26th, Tuesday at 8 p.m., where we are going to have an event specifically designed for small income account that we are growing into bigger account. So it's next Tuesday, April the 26th at 8 p.m. All you have to do to register for that event is be part of the database, and you'll get the invite at realtraderswebinar.com, which is in your control panel from your go-to webinar tonight, the realtraderswebinar.com/DTZ free. When you sign for that, you will be on the database for the 3 free video coming into your email. Those are awesome videos. It's about 40 minutes of content, pure content, and also it will help you understand some of the processes we do for this Tuesday's webinar. And also, if you are the ones who can see a deal when they see one, $7 trial for 14 days of the buy zone, caution zone, sell zones, weekly video, and get together with the trade of the week so that you can earn money as you learn this business. Kevin and I are open. If Kevin at Real Traders okay, we have 5 minutes to take Q&A. If you guys have Q&A, I think Kevin and I will be super glad to answer any of your questions, guys. Remember, we are traders just like you, and we have been there and done that just like you guys before. And I see that Kevin has answered almost all the questions on the go-to. But if you guys had a questions, we'll be willing to stay another 5 minutes. Otherwise, again, we'll see you Tuesday. Abby, Alan, Arno, Barash, Bob, Bodo, Brad, Bruce, CJ, Chris, Clifford, Dave, David, Douglas, Emma, George,
Brad,
everyone, Richard, everybody that came tonight. Hopefully you learned something. We want you guys to learn and think about your trading differently. That's all we ask people, is to give us a chance to help you and change your trading forever. Okay? We have been at this for 14 years. For the people who do not know us, guys, 14 years. We are well documented on the internet with over 100 reviews. We are passionate about trading. Kevin is my co-head trader. We are both initially from the professional side, and we just love helping traders to get from where you are to where you want to be. Hopefully that was helpful, everybody. Again, realtraderswebinar.com/DTZ free. Okay, guys? Hopefully that was helpful. You have a nice evening, everyone. And you take care, and we are looking forward to seeing you Tuesday at the live event. And don't forget to get your 3 real money videos at that link as well. Okay? Take care, everybody.
Thanks,
have a nice
everyone,
evening.
for being here. Abe and Emma and Chris, CJ, great interaction, people in the background here. Brad P, good stuff, right? Good questions. I can see that level of engagement and level of intelligence. The thing is that we really want smart, disciplined traders in our community. We're really selfish. We like to hang out with other traders that are successful, and if you're not quite as successful as you like to be, we'd love to have you come join us and give me a shout. Give us a shout in that Tuesday live session. We call it the Chart Blast. Give me a wave and say, hey, I was there on Thursday night, and or first time here or something like that. And we like to look at all underlyings, right? I mean, some of the greatest trading, like ENB, right? COP, some of these great trading instruments that we've done recently, and made plenty of money on. Those were ones that students shared with us in those live sessions. So we love looking at all instruments. Microsoft, Walmart, oh my gosh, right? Home Depot, So we've got hot instruments, and then we look at and we really gauge the market off of. But we're looking at a lot of different stuff here, and you could see in Mark's portfolio FCX, SLB, SLV. Oh my gosh, right?
Yeah, this is guys. You have to understand, if you are not an income trader, All I'm asking you guys is give yourself a chance. Give yourself a chance to understand the principle of the stuff we showed you. I mean, combined tonight, we must have showed you over 60 to $80,000 of profits. We do that with real money all the time, guys. And I urge you to really understand that this can truly change the way you trade forever. Especially if you have been one of those traders doing only forex, futures, or if you have been unsuccessful at options. And even if you have been very successful, we work with options, with fund managers, institutions all day long because they see return on investment with our tool and processes. You take care, everybody. See you Tuesday. Again, realtraders.com. realtraderswebinar.com/DTZ free. This is your unique opportunity to join us Tuesday, get your free video, and if you want or do not want to take advantage of that one-time offer of $7. You take care, everybody. Have a nice evening. Stay safe.
All right, thank you so much, Mark and Kevin. Guys, again, this is Kevin from Real Traders Webinar. I just wanted to come on again and just say that, this is one of the best training series we've ever had feedback from the Real Traders Webinar community. We've had thousands of people go through it, and it's the #1, the most popular. If you check out our YouTube channel, you'll see that this is by far the most popular videos on it. So I definitely recommend checking it out. Go over to realtraderswebinar.com/DTZ free, and definitely attend that live event on Tuesday night, and we'll see you next time. Thank you for being here. Thank you, Mark and Kevin.
Yeah, thanks, Kev. I appreciate that.
Thank
Every
you,
time we
Kevin.
come on, Kevin keeps re-inviting us back, and so we're really thankful that Kevin continues to come tap us on the shoulder and have us back again and again, and we really appreciate what Real Traders Webinar has done for us in the past. So we thank you, Kevin D. All right, peace, everybody. Everybody have a great night now.
Have a great night, everyone.